What if I told you that your daily coffee habit could be costing you over $300,000 in potential wealth? Today, we're tackling the age-old debate of small daily expenses versus long-term investing, but with a twist that might actually change your financial future. Welcome back to Smart Money Moves. I'm your host, and today we're diving into a financial challenge that could transform your relationship with money forever. Whether you're struggling to build wealth or already on your investing journey, this video will show you exactly how to turn small sacrifices into substantial passive income. The average American spends about $25 a week on coffee shop visits. That might not sound like much, but what happens when we redirect that money into dividend-paying ETFs? Could you actually generate $5,000 in monthly passive income? Let's find out together. Most people underestimate the true cost of their small daily indulgences. That $5 coffee isn't just $5, it's the compound growth that money could have generated over decades. But here's where most financial advice gets it wrong. Simply telling you to cut out life's small pleasures isn't realistic or sustainable. The bigger problem is that most Americans have no concrete plan for how their small sacrifices translate to financial independence. According to a recent survey, 63% of Americans don't know how much they need to invest to reach their retirement goals. Even more concerning, 72% have no idea how to generate passive income from their investments. People often make these critical mistakes. First, they focus on saving without a clear investment strategy. Keeping money in a savings account earning 0.5% interest while inflation runs at 3 to 4% means you're actually losing purchasing power every year. Second, they chase high-risk investments looking for quick returns instead of building a sustainable dividend portfolio that grows over time. Third, they lack consistency. Most people start strong but abandon their investment plans when markets become volatile or when life's expenses come knocking. Finally, they don't understand the power of dividend reinvestment and compound growth. This mathematical force has been called the eighth wonder of the world, yet few harness it effectively. The consequences: millions of Americans will reach retirement age with insufficient funds and no passive income streams to support their lifestyle. But it doesn't have to be this way. Let's break down exactly how to transform that $25 weekly coffee budget into $5,000 monthly dividend income. I'm going to share the exact ETFs, allocation strategies, and timeline you need to make this work. Step 1. Start with automatic transfers. The first key to success is automation. Set up automatic weekly transfers of $25 from your checking account to your brokerage account. This removes willpower from the equation. You can still enjoy coffee occasionally. This isn't about deprivation. It's about intentional allocation of resources. Step 2. Select the right dividend ETFs. Not all dividend investments are created equal. You want ETFs that balance yield with growth potential. Here's my recommended portfolio allocation. 30% to SCHD, Schwab U.S. Dividend Equity ETF, which focuses on quality companies with strong dividend histories. These are companies like Home Depot, Coca-Cola, and Pfizer, businesses that have weathered economic storms and still increased their dividends. 25% to JP Morgan Equity Premium Income ETF, which provides higher current income through a combination of dividends and option premiums. 20% to Devo, Amplify CWP Enhanced Dividend Income ETF, which adds an option strategy to dividend stocks for enhanced income. 15% to SPYD, SPDR Portfolio S&P 500 High Dividend ETF, focusing on the highest yielding stocks in the S&P 500. 10% to O, Realty Income Corporation, a monthly dividend payer that gives you exposure to commercial real estate without the headaches of being a landlord. This portfolio currently yields about 4.3% on average, with strong potential for dividend growth over time. Step 3. Implement dividend reinvestment. The magic happens when you reinvest all dividends automatically. This accelerates your compound growth dramatically. With dividend reinvestment, each payment buys more shares, which generate more dividends, creating a powerful wealth-building flywheel. Step 4. Gradually increase your contributions. As your income grows, challenge yourself to increase your weekly contributions. If you can eventually invest $100 per week instead of $25, you'll reach your $5,000 monthly dividend goal much faster. Step 5. Stay the course during market volatility. When markets drop, dividend investors have a psychological advantage. Those dividend payments keep coming, reminding you that your investment is working even when prices decline. In fact, market downturns are opportunities to buy quality dividend stocks at better prices and higher yields. Let's look at the math of this strategy. Starting with $25 weekly, $108 monthly, invested in our portfolio with a 4.3% yield, reinvesting all dividends, and assuming modest 7% annual dividend growth. After 5 years, your portfolio would be worth approximately $7.500, generating about $27 in monthly dividends. After 15 years, your portfolio would grow to around $45,000, generating about $160 in monthly dividends. After 25 years, your portfolio would reach approximately $180,000, generating about $650 in monthly dividends. After 35 years, your portfolio would grow to nearly $580,000, generating over $2,000 in monthly dividends. To reach that $5,000 monthly dividend goal, you'd need about 30 to 40 years of consistent investment with our starting amount. However, if you can increase your contributions over time, you'll reach this goal much faster. For example, if you gradually increase your weekly contribution to $100, $433 monthly, you could potentially reach $5,000 in monthly dividends in 25 to 28 years. Now it's your turn to take action. What small regular expense could you redirect toward building your dividend portfolio? Remember, this isn't about eliminating all life's pleasures. It's about making intentional choices that align with your long-term financial goals. If you're ready to start your dividend journey, I've created a free dividend ETF starter guide available in the description below. It includes detailed analysis of each ETF I mentioned today, along with alternative options based on your risk tolerance and time horizon. Next week, we'll dive deeper into tax-efficient placement of dividend investments across different account types. Make sure you're subscribed and hit that notification bell so you don't miss it. Drop a comment below letting me know, what's one small expense you could redirect toward building wealth? I read every comment and respond to as many as I can. Until next time, keep making those smart money moves that your future self will thank you for.